Hello traders, last trading day of the week, Friday. Well, let's focus and try to look at yet another currency pair, Canadian versus the Japanese yen, long-term price perspective. Before we get started, I would like to remind you that information in this video is for educational purpose only and should not be considered as a financial advice. And don't forget to subscribe to our channel to follow all the videos we post every single day. So stay tuned, notified, and click that notification bell as well. So let's have a look at the Canadian Japanese yen. Overall, what we can see is the range trading. There is a quite a wide range trading actually, which where we have the resistance formed at 81.88 and the support at 78.00. So this makes it a 400 pip wide range. For now, it seems that there is no clear direction of the trend, although if we look at the daily, clearly higher highs and higher lows are being produced. Now, in order for the trend to reverse, obviously we need to break below this low, then there will be a new lower low. Only then the trend might change, but it seems that it remains bullish up until this point. I have applied FIBs to this move to the downside where we saw this massive price drop, really fast one. And I have very interesting level here at 38.2 FIBs, which is 78.00, almost precisely a psychological support. It has been rejected very cleanly on the June 12th and it provided a strong support. It is clearly a key supply demand area because we had the rejections there, we had the rejections here, and the last one occurred just recently. So this is the last rejection. This goes to show that bulls heavily defending this support area, and as long as price is above, it will be most likely an uptrend, a long-term uptrend. We can also see the resistance trend line, which hasn't been broken, which still validates the range trading. It means that the price is still ranging, and unless we have a break above this high, it will still remain in the consolidation phase. For this reason, we still can expect the downside correction once again, unless we have a breakout. So I have several scenarios on this analysis where we either go up straight away non-stop or we have a correction. For the correction to take place, we need to break below this support. We can see that there was a clean rejection yesterday of 61.8 FIBs. I have applied FIBs to this correction where we had a clean bounce of 38.2 and we have 61.8 as the support. Price broke to the upside, made a support there, and it's still trading above this level. In order to confirm that there will be correction, and I think it should take place, we need to have a daily close below. Then price is likely to correct towards the 50 simple moving average. If we extend it, we can see that there is a support at around 78.70 area, which is also corresponds to the downtrend trend line, which has been broken, but it might be acting as the support once again in a couple of weeks, maybe a month. But it seems like there is a good chance that there will be this correction, but of course we need to break below. Up until this point, what should be happening? I think price might be going slightly higher. It might retest the trend line before and if this correction will take place. And I would like to emphasize that the trend is bullish. It's more bullish than bearish. It's only a correction that I do expect. It might not take place. It might, we will see. So the lower price will get, I think that more attractive the buying opportunity will be for the buyers. And we see this spike produced below the moving average. I think this has to be broken. There should be another spike because stop losses are likely to be placed around this price area. And for this reason, we need to break below this level to collect all the stop losses, and then new buyers will step in. In regards to the upside resistance, I have two levels to watch, important levels, also based on these FIBs where we had a clean rejection of 61.8. These are 78.6 and 88.6. This is only when we break above the trend line and the previously made resistance at 81.41. Then I think it will continue. There will be this confirmation of the continuation. But for now, it will likely to range between this support 80.42 and the trend line resistance. So there could be this consolidation going on for a few days, maybe more. All in all, remains bullish, but watch this support closely. If I would be a buyer, I would definitely not go long at this price, because price is simply too high and it's far too risky to buy. And therefore, this correction is something that many buyers could be waiting. Once and if there will be this correction, the upside potential could be around 400 pips or even 500 pips. So 380 or 480 pips, which is pretty good. I think considering that the risk to reward will be amazing, because we only need to hold this support. So that's the analysis for the Japanese yen. Time to move back to all the previously made analysis, starting Australian dollar. Australian is breaking up. I think it shows that the dollar is being weak and Australian dollar is being strong. Nonetheless, we have this forecast where the price will be rising substantially, but at some point correction will follow. I'm just not sure, because we are breaking above the resistances. If I go to weekly, this is the previously made resistance made early September. This could be the confirmation that the trend is up, and this is exactly when corrections happen. When you have this confirmation, price goes down sharply. I still expect correction. We will see how it goes, but the trend is bullish, watching for the potential move to the downside, and there could be the better entry point for buyers. Pound Australian dollar, price is still struggling to break above the moving average, to break above the trend line. Nonetheless, we still are bullish. There seems to be a very strong support near 1.8 psychological level. It's been respected multiple times, which goes to show buyers defending this area, and at some point it should be starting to produce higher highs. I think this high could be broken even today, and there will be a substantial price increase, but we expect quite a big move, so I will adjust it more or less like that. I think it goes towards the next cycle for our chart, and this is something that I would expect. Maybe it will go even faster. Maybe we will do something like that. It's possible. There are two scenarios that I can expect from the pound Australian dollar. To make this sort of move, I think that the pound must be strong and the Australian dollar should be weak, because this is quite a big move, about 700 pips, and overall it might be going even more. So yeah, very bullish on the pound Australian dollar. Pound dollar continues to trade up, also expecting the resistance to be tested at some point. Now the trend line is acting as the support, the channel is acting as the support. This could be the starting point of yet another fast price increase. This could be that. Same for all pound pairs. This could be even for the pound Swiss franc, where pound strength is still expected. I do believe it will be going up quite nicely in the coming weeks, couple of weeks probably. So yeah, the pound pairs looks very bullish. And speaking about the pound New Zealand dollar, we can see that there was finally this break above this resistance area. So next resistance becomes at 1.91, very close, and overall we are looking at the final upside resistance at 192.67. So there is still about 200 pips to go, but this is only the short-term view. I think it will be going much higher, but we need obviously to break above the final resistance. And on the way up, watching every single resistance area before and if uptrend continues. The next and the last pound pair that we have is pound Japanese yen. On this chart we have also a long-term perspective where there are two scenarios. Either price will continue non-stop, will be a fast rally, or there will be break below the trend line, correction to the middle trend line of the channel, and only then uptrend. So these are the two scenarios, and you can see all the pound pairs. We have analysis that suggests that the pound will be strong. Final one we're left with is the euro versus the dollar. Yet price failed to break resistance trend line. Still need to see whether there will be this breakout or not, but As I said, the trend remains very bullish. I don't see that there will be any sort of reversal, especially after this long-term consolidation and finally break to the upside. It's just the matter whether the price will go up fast or there will be a correction. And this is exactly the scenarios I am considering and we are looking at. Either price will break higher to the upside or it will correct. In either case, we need to watch this resistance area. So that's it, everyone. I hope you enjoyed it on this Friday. If you did, I would appreciate your like. If you didn't, put dislike, but let me know in the comments what you didn't like specifically. And if you still haven't subscribed, do it right away. Follow our channel, turn on the notification, and I will see you guys all on Monday. Have a nice weekend. Enjoy, have a rest. We'll speak to you very, very soon. Take care and wish you profits.